Hello, doctor and my classmates. My name is Zhang Miao. My trial number is 244243 from Group 6. Today, our group will present Topic 3, Taxation on Banking Business. This is our group members. For content, we divide the Topic 3 into 4 parts: concepts and definition, banking and non-banking business, tax treatment and scope of charge, tax incentive available. Okay. Now I will present the first one, concept and definition. For the type of bank, we divide into 4 different banks. They are commercial banks, investment banks, branch banks, and offshore banks. The first one is the commercial banks. The commercial banks means that a financial institution which accepts deposits from public or give loans for investment. For the vocation of commercial banks is that licensed to receive deposits such as determined deposit accounts, saving accounts, money market accounts, and timed accounts. And the commercial banks also provide lines to borrowers who pay interest to the banks as long as the loan is outstanding, such as the short-term lines, car lines, mortgage, lines to business to fund capital purchase, and lines of credit. The second one is investment banks. The investment banks means that a financial institution that superlies the raising capital for other entities. And the investment banks act as intermediary between investors and corporations. Also, the investment banks are supervised both by Bank Negara and the Securities Commissions. The vocation of the investment banks is that providing underwriting and merger and acquisition advisory service. The third is branch banks. The branch banks is a retail location through which a bank offers its service to customers both through face-to-face and automated delivery. And the vocation of branch banks is that accept deposits or making loans at facilities away from a bank's home office. The next is the offshore banks. The offshore banks means that located outside the country of residence of the investor. It provides banking service to customers who are not physically located in the country where the bank is located. I already finished my part, so my friend will continue to present the next part. Thank you.
Assalamualaikum to the lecturers and friends. So my name is Fakru Amri bin Abdul Ghani. My matric number 256281. I will talk about banking and non-banking institution. So both banking and non-banking institution is financial institution. Financial institution is an institution that serves as intermediaries by channeling the savings of individual, business, and government into loan and investment. So first we talk about banking business. So banking business is a range of service provided by a bank to business corporation. Service offered under business banking include loan, credit, saving, and checking account, of all which are tailored specifically to the business. Banks are able to offer business, retail, and investment banking service under one roof. So for the resident bank, Section 60C of the Act states that where a person who is a resident for basis year for year-end carry on a business of banking in Malaysia or elsewhere, his gross income and adjusted income or adjusted loss for the basis period for that year-end from the business and his statutory income for that year-end from the business shall be asserted by reference to his income therefrom wherever occurring or derived, excluding the gross income, adjusted income or adjusted loss and statutory income attributable to offshore business activity, a licensed Malaysia offshore bank. So Section 60C governs the scope of taxation of resident bank and financial institution. The banking business source is taxed on world income scope, namely banking business income, wherever occurring or derived. It should be noted that world income scope only applies to the banking business. This covered the relationship of Malaysian head office, bank or companies with overseas branches carrying on business of banking. Where the overseas branch derive business income from banking, such income would be subject to Malaysian income tax at the point of accrual of foreign income. In event such foreign income suffered foreign tax, double tax relief will be allowed either by way of unilateral relief, which 50% of foreign tax suffered, or bilateral relief against Malaysia's income tax payable. Unilateral relief would be computed in event the foreign country does not have double taxation agreement with Malaysia, and on the other hand, bilateral relief is computed when the foreign country is treaty country with Malaysia. So next, for the non-banking financial companies, NBFCs, both are entities or institutions that provide certain bank-like and financial service but do not hold a banking license. Investment bank, mortgage lenders, money fund, private equity fund, and P2P lenders are all examples of NBFCs. So NBFC has where a resident bank carried on leasing business on investment activities which non-banking source, the scope of income taxation would be modified territorial scope, namely Malaysia derived income and foreign source income received in Malaysia from outside Malaysia. In event foreign tax suffered on the foreign source income, such foreign tax will be allowed either unilateral relief or bilateral relief against Malaysia tax payable. So that's all from me. I will pass to my friend.
Hello everyone, my name is Tan Yen Yong, metric number 256129. Now I will continue with the part 3 of topic 3, tax treatment and scope of charge. Determination of chargeable income and tax payable. This is the format on how to compute the chargeable income and the tax payable. Firstly, we'll minus the allowable expenses from the gross income to get the adjusted income. Next, we'll minus the capital allowance to get the statutory income. After that, we need to minus the business loss to deliver the chargeable income. Next, we need to multiply with the tax rate to get the total tax charge. After that, we need to minus also the deduction under Section 110, tax relief under Section 132 and 133 to get the net tax payable or tax refund. For the deduction and tax relief will be explained by my friend later. This is the example of the question. ABC Bank Berhad is a resident merchant bank which is a licensed bank that have several branches in Malaysia and overseas branch in Japan. Malaysia has a double taxation agreement with Japan which provide tax credit relief. Adjusted income computed for Malaysian tax purpose. Malaysian branches RM 600,000, Japan branches RM 200,000. ABC Bank has paid Japan tax of RM 50,000 on income of its branch for the year 2019. Now, compute the income tax payable for ABC Bank Berhad for the year assessment 2019. Here is the solution. Firstly, we need to write down the company name, which is ABC Bank Berhad, and the title, Income Tax Payable for the Year Assessment 2019. To compute the chargeable income, we need to add on the adjusted income from Malaysian branches and Japan branches, which is 600,000 and 200,000, So we will get 800,000 as our chargeable income. Next, we need to multiply with the tax rate 24% to get the income tax payable of 192,000. After that, we need to minus with the bilateral relief as we have double taxation agreement with Japan. So this will explain by my friend Future. For the Malaysian tax, we will get 48,000, and for the Japan tax, we will get 50,000. So here we will choose the lower amount, which is 48,000, and we will minus it from the income tax payable to get the next income tax payable of 144,000. So now I will pass to my friend, and later on I will continue back with the interest payment.
Okay, next, scope of charge, section 60C, income tax 1965. Resident carries business banking in Malaysian gross income and adjusted income or loss for year assessment. Statutory income for year assessment shall be ascertained from his income wherever accruing or derived. Exclude the gross income, adjusted income or loss, and statutory income attributable to an offshore business activity of a licensed Malaysian offshore. And then next, a resident bank, which is known as world income scope. The banking business source is tagged on world income scope, namely banking business income wherever accruing or derived. The world income scope only applies to the banking business, which covers the relationship of Malaysian head office, like banks or finance companies, with overseas branches carrying on the business of banking. The resident bank world income scope. Resident bank are taxed in Malaysia, not only on Malaysia operation, also income earned outside Malaysia, which means that the income derived in Malaysia and outside Malaysia will be taxed. Foreign income may be subject to double taxation in host country as well as Malaysia. Bilateral tax for countries with double taxation agreement and unilateral for countries without double taxation agreement. And then non-resident bank territorial scope. For non-resident bank in Malaysia is tax on income from business derived from Malaysia, which means that the income derived from Malaysia will be taxed, but the income derived outside from Malaysia will not be taxed in Malaysia. Next, deductibility of bad debts. Requirements under Section 34, Subsection 2. First, trade debts reasonably estimated in all circumstances of the case to be wholly or partly irrecoverable. What is the meaning of the reasonable estimates? Which is the debtor is insolvent, debtor is abscondent, debtor has passed away, debtor is statute barred. For non-performing loan, banks are allowed to provide specific provision for bad debts in relation to non-performing loan. For first, the debt which partly irrecoverable should be deemed. Second, include all interest in respect of a loan or credit facility. Next, the bank with overseas subsidiary. The world income scope not apply to the overseas subsidiary income. The world income scope I have explained in the previous slide. And the overseas banking profit would be subject to foreign tax. If overseas subsidiary pays dividend to Malaysian holding company, then dividend income would be subject to Malaysian tax, and the dividend income also will be treated as investment income.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Ainul Syakrina binti Muhammad. My matric number is 252708. So, I will continue with withholding tax. I'm sure you are familiar with withholding tax because we already learned in taxation 1. Withholding tax is an amount withheld by the party making payment, the payer, on income earned by a non-resident, which is the payee, and paid to the Inland Revenue Board of Malaysia or LHDN. The payer here refers to the individual or body that carrying business in Malaysia, while the payee refers to the non-resident individual or body in Malaysia who received the payment. Income from overseas banking business is subject to foreign withholding tax. Most countries impose withholding tax on dividend income. When dividend income suffered withholding tax, it will be accorded either unilateral or bilateral relief against the Malaysian income tax. So in order to determine whether it is the unilateral relief or bilateral relief, we need to refer to the agreement between the countries. So this is how we should calculate bilateral or unilateral relief. Bilateral relief is the lower of foreign income, the statutory income, divided by total income and times by Malaysian tax payable or foreign tax payable. So we choose which is the lower between these two. And same goes to the unilateral relief because we also choose the lower of foreign income, the statutory income, divided by total income, times by Malaysia tax payable or half of the foreign tax payable. Underlying tax is the tax which is charged on income out of which dividends are paid, but which does not appear as a direct deduction or withholding from the dividend itself. As you can see, this is the format of underlying tax, which is gross dividend divided by profit after tax times by tax on profit. To make it more clear, this is the example of underlying tax. Jum Bank, the resident Malaysian bank, has 27% shareholding in EFG Bank, an Indonesian bank. Malaysia has a double taxation agreement with Indonesia which provides full credit tax relief for Indonesia tax, including for shareholding exceed 20% in any company, relief for underlying tax. For year end 31st December 2019, EFG Bank shows the following result. Profit before tax is 200,000, Indonesia tax is 60,000, profit after tax is 140,000. Indonesia deduct withholding tax of 10% dividend payment. In the year 2019, June Bank received net dividend of 60,000 after 10% withholding tax in Indonesia from EFG Bank. Compute underlying tax for dividend income from EFG Bank. So you can try to do it based on the formula before. This is the solution for the question. To calculate the underlying tax, we take net dividend at withholding tax, and the amount we use to calculate underlying tax. So you can see the solution here. That's all from me. Thank you.
Interest payment. Interest paid by Malaysian licensed bank to a business with permanent establishment in Malaysia is subject to 15% withholding tax. Next, according to Para 33 Schedule 6, Income Tax Act 1967 provides that interest paid to a non-resident person in Malaysia is not subject to withholding tax. Lastly, interest paid by a Malaysian branch to its headquarters (HQ) is also tax exempt.
Assalamualaikum. My name is Nur Shazan Najia binti Muhammad Shukri. My matric number 255798. So now I want to talk about tax incentive that available in taxation on banking business. So what is the tax incentive? Tax incentive is a government measure to encourage individual and business to spend or save money by reducing amount of tax that they need to pay. So they have two incentive in this taxation on banking business. First is exemption of income. So what is the meaning? The meaning is an income that derived by the qualifying person who have a license and registered under Islamic Financial Service Act 2013, which they have carried on Islamic banking business or takaful business in other international currency which is other than ringgit Malaysia, such as euro or dollar. So who is the qualifying person that have right in this exemption? First is the International Islamic Bank, second International Takaful Operator, third is International Currency Business. So the qualifying person or company will have a full income tax exemption for 10 years, and this exemption was effective from year assessment 2007 until year assessment 2020. Second is exemption of stamp duty. So the meaning of exemption of stamp duty is a instrument of transaction in currency other than ringgit Malaysia relate to that have related to the Islamic or takaful banking business, and this instrument of transaction must between the qualifying person and the resident customer or non-resident customer. So the qualifying person is like international currency business, international Islamic banks, and international takaful operators. So what is the stamp duty meaning? The stamp duty is the tax that levied on legal documents, usually in transfer of asset or property. So how does it works to the qualifying person? It will exempt on all instrument execute that related with the Islamic or takaful bank. Example of instrument of related to the Islamic bank is the isti'anah, ijarah, sukuk, and others. So this exemption also effective from the year assessment 2007 until 2020. That's all from us. Thank you.